Hi, everybody. Paul LaChance from the Software Equity Group. My title is Chief Industry Strategist, Technologist, and Evangelist. I'm also a former CEO and founder of a bootstrap SaaS organization in the sector, in the enterprise asset management sector. Really happy to be presenting to you SEG and my take on the state of the industrial and manufacturing sector. Break this up into 4 sections. We'll get into the data, what's going on in the sector, headwinds and tailwinds. Move into a general sector overview and education. We'll cover the software as a service landscape, as well as mergers and acquisition observation, deal observations in the space. So the sector is hot. This is the PMI, or the Purchasing Managers Index, which is a reading that comes out once a month, and it's a good barometer, a health measurement of the industrial or manufacturing sector. Anything greater than 50, and this is a dark blue line, is considered expansion in the sector. And if it drops below 50, which it did in the US-China trade wars, that's pre-COVID, the beginning of the global pandemic, and then we climbed out and was in real expansion territory for a long time. We've dropped back in about 18 months ago or so. We dropped into recessionary times, and that coincided with the general drop in the markets and the economy in the US, just starting to climb out with optimism. Good times and bad, manufacturers need technology to help, whether it's control costs or whether it's to help with booming business. So the sector is fairly resistant in terms of the technology is needed, good times and bad. There are other pretty major tailwinds if you look at it from an economic standpoint, headwinds if you look at it from the standpoint of how the technology can help. Inflation and energy. Back in 2022, I call this the high score year. We saw record level high inflation, energy prices were sky high. We saw that to start to level off in 2023, and we're seeing it even to level off even more this year, but it's still expensive to do business in this country. It's still challenging from a cost standpoint. The labor market is probably the biggest and long-standing challenges to the sector. Back in 2022, we called it the Great Resignation. We renamed it to the Great Reshuffle in 2023. But this industry, the manufacturing and industrial sector, is heavily relying on a bunch of veteran men and women filling these roles. They're all retiring, and they're being replaced by lesser skilled, lesser trained, and far less tribal knowledge. So it's a huge challenge to the industry. Not enough quality. Well, they're quality people, they just don't have the experience. And technology is going to be incredibly important to make up for these gaps. We also see this in the supply chain. The supply chain, although back in 2022, we all remember how hard and challenging it was. And it wasn't just COVID, it was the US-China trade war, it was the Suez Canal blockage. We are also seeing things like the Baltimore Bridge. But all of these things combined, if you look at it from, this is a great McKinsey chart up here, from impact from low to high in the sector. You look at what we've faced in this country and around the world. We had a major trade dispute, which on its own will cause ripples in the supply chain. Financial crisis, which we're still, in challenging times. Global military conflict, we have 2. And we're still feeling the lingering impacts of a global extreme pandemic. This is right up there with super volcano and meteor strikes in terms of how it can affect. Again, these are uncontrollable factors in the industry. However, you need to work around them. Again, another reason why SaaS technology in the manufacturing and industrial sector is so, so important. There's also some really amazing things that are happening from a legislation standpoint. We've seen a number of bills and executive orders, and every legislation has really tried to push this. We've just seen great activity in the last 4 years. They made an executive order, the IIGJA, the infrastructure bill, which is absolutely starting to bring in more reshoring and onshoring, more US manufacturing required to submit supplies and materials and assets to this. The CHIPS Act, which gets into competitiveness around technology, and the Inflation Reduction Act, because things like supply chain challenges directly correlate with increased inflationary costs. So all of these things combined make for a really positive And for the first time in decades, we're seeing great growth of manufacturing on our own soil. It's a great time to be doing business in the space, but look back at the challenges. It's expensive to do work, and we don't have enough people. That's why this technology is so important. So running through a handful of slides on an overview of the sector. Manufacturing is many, many things. If you look at it just broken up like manufacturing, well, it's heavy equipment, it's machinery, it's automobiles, it's so many food and beverage and textiles, chemical industry. So you have this combination of process manufacturing, which is like food and beverage and paints, discrete manufacturing, which gets into items that you can see, hold, or physically, make out. But there's a lot of other varieties: job shop, batch, repetitive manufacturing. And then when you add into industrial, things like forestry and logging, oil and gas, waste management and recycling, the energy industry, these technologies that support this industry have many, many flavors given the many, many different ways operations is done. So there's just no one type of SaaS in this space. There's lots and lots of different flavors. Digital transformation is a ubiquitous phrase that we have been talking about for quite a while right now. Digital transformation, to me, has digital in the title, but it's much more. It's really a business model. It's a cultural shift. It's about looking at the challenges and, equally important, the opportunities. The challenges being the labor market, high energy prices, high labor costs, challenges in the supply chain, as well as the opportunities. There's a lot more business that's coming to US soil. We have to figure out a way to competitively operate. Technology can be the difference. It's also about moving from an industry 3.0. Industry 3.0 was about robotics and computers and other forms of automation. We need to move to an industry 4.0 company, and that's where data, the interconnected nature, artificial intelligence, machine learning, the Internet of Things, we need to move into this realm and using these technologies to solve these problems, optimizing processes, intelligent data-driven decisions. Data is at the center of this. And there's this concept called the Unified Namespace. We'll get into that later in this presentation, but data is at the center of the process. It's how we have to physically connect to our assets, our equipment, our facilities. We have to collect data, analyze, store it, visualize it, find patterns using AI, predictive analytics, and so forth, report and solve for those challenges. Data becomes so important. And there's lots of ways this gets done through looking at your OEE or first pass yield rates or production costs and other key metrics. I'll spotlight an example here. In the maintenance engineering side of things, there's this concept called pushing up the PF curve. Say you have a manufacturing or industrial operation, you get a brand new asset or production line, you get that in place, it's installed, it's running, that asset is going to run as good as it's ever going to run. It runs, it runs, it runs, it eventually hits the P point in the PF curve. That's where that asset starts to have degradation. It's starting not to run an optimal peak performance. You can't see it or smell it or hear it. But if you continue to ignore it, that asset's going to decline until it hits the F in the PF curve. That's functional failure. That's where it's no longer able to keep up with its intended design. Quality diminishes. Unplanned downtime goes up. And if you continue to ignore it, you're going to have catastrophic failure, the premature replacement of that asset, super expensive and disruptive things. Maintenance, operations, engineering, good production, our goals are to push up the PF curve. Well, we used to do that with basic preventive maintenance on a calendar basis. Now we have these amazing tools, these sensors, this data, harnessing artificial intelligence, where we can do condition-based monitoring, predictive maintenance, even prescriptive maintenance, where we catch problems way up here as opposed to down here, pushing up that PF curve really can help our operations. It can also save these organizations a lot of money. So if you employ an enterprise asset management, CMMS, APM, and you catch your problems early on the PF curve, well, your maintenance is going to be far less expensive. You catch it later, it's going to double. You catch it really late, you're looking at a 500% increase in the cost to perform your maintenance. Your CapEx goes from simple replacement of components to complete overhaul of those assets goes way, way up. So this pushing up the PF curve is not only good for your operations, it's good for your P&L, it's good for your competitive nature, and it takes this SaaS technology to make that come true. We talked about data being at the center of everything. As you move from an industry 3.0 with partial automation to the interconnected nature of an industry 4.0 organization through digital transformation, data is so critical. There's this concept, this architecture called the Unified Namespace. Data is at the center. In the old days, your ERP system seemed to be at the center of everything. Financial, yes, there's resource planning in there as well, but it really was not as close to the shop floor, to where the operations got done. And all the technology sort of surrounded this. Well, the paradigm has changed. Now, as we see the center of operations where all of that data lives is where your operations happen. Now, the ERP and the financial system is still incredibly important, but it feeds into where all of this data needs to be, as well as all these other key systems, your enterprise asset management, your manufacturing execution systems, warehouse, quality, product lifecycle, and of course your physical world, all of that data that's coming off your plant floor, your buildings. If you get that all into this contextualized, normalized space that all of these different technologies can publish and subscribe the information, this is the future. This is where good AI, predictive analytics, prescriptive operations can happen with this sharing of information. So this is a concept that is developing and growing, but will be incredibly important to the future of operations in this space. And the technology companies need to adhere to this. Security becomes incredibly important. There are all kinds of security preventions we see in our information technology, how we keep malware and computer hacking from our personal computers. Equally important is industrial cybersecurity at the edge, our cloud apps, through our supply chain, our AI, our machine learning, everything surrounding this unified namespace. You have to take into account security in these operations as well. So let's talk about the SaaS, software as a service landscape. This is how we kind of view the sector. Again, industrial manufacturing is many, many things, and there are many flavors to this technology that is often specialized. Like, look at life sciences manufacturing. It needs specialized blends of your CMMS, EAM that allow for compliance, regulatory compliance, validation. Same thing with defense and aerospace. But if you look up to the broad categories here, automation control, digital, physical connection. It's how we get data out of the physical world. So the IoT, SCADA systems, PLC, HMIs, and related. Once the data is in the digital world, it needs to be managed. And there's all these amazing companies in the industrial data ops, analytics platforms, BI, and related. So IoT platforms, OEE, the unified namespace type tools will be in this sector as well. Operations and asset management, big theme of this report here. So that's where all those more traditional ones like asset performance management, calibration, computerized maintenance, enterprise asset management, ERP, MES, quality, supply chain, transportation, warehouse management. And then there are other adjacent areas as well. Product lifecycle management, your CAD, your simulation and modeling, and then regulatory safety and compliance. So your ESGs, your OSHA, your environmental health and safety's risk management is its own animal here. We break this up into our market maps. I know this is difficult to read here. You can visit our website and see much more details on all of these organizations. real excitement in the sector, given the reshoring, the onshoring, renewed interest in U.S. manufacturing, not only in the traditional, more operational focus ones, but in these industrial data operations, that unified namespace, that digital physical world connection as well. So if you want to get a breakdown here, you can go visit the website and kind of flow through all of these areas. Last section here is just observations in the mergers and acquisition area. So I think the first thing that's been of note in the last several years is kind of a shift between strategic buyers, the light blue bars, more towards private equity over the last several years. So the high-flying M&A, which is also high-flying market numbers, economy numbers in the earlier 2020s, it's really changed when we've had more challenging economic times. We've seen strategic buyers kind of step away a little bit, relatively speaking, to the private equity, presumably to focus on their core operations. The private equity industry sees the manufacturing and industrial sector as a durable space, a safe space. If manufacturing organizations are really challenged, well, we have bigger problems. So more and more deal flow from private equity, relatively speaking, over the last couple of years. And we see that in historical deal volume over the last couple of years, as well as investment organizations see this as a solid and safe place to be investing. We see this in our own spotlighting that pushing up the PF curve. It's kind of a win-win-win situation. As we talked about earlier, as manufacturing and industrial organizations push up the PF curve, they get superior operations. They save money. They can operate in challenging economic and operational environments. It's also good for the technology companies that create these things. These are SEG deals that we've done over the past handful of years that fit firmly in this pushing up the PF curve space. Well, they've had nice exits. It's also a win-win situation for the private equity firms and the strategic investors that acquire or make investments in these, because those investments have proven to grow up to really attractive and eye-popping deals for the private equity organizations that have made these investments, not only ones we've seen in SEG relationships, but just general notable market deals. Bigfoot, my product, acquired by Brightly and now Siemens, that was a really large industry deal. We've seen it with the Fix Plex combinations in a Rockwell Automation, ServiceMax, and a PTC and otherwise. So exciting times in these sectors for the manufacturers and the industrial organizations that have to work here, as well as the investment community. SEG, a lot of experience in this sector. We've done a lot of deals in this space. We study it. We are always looking to talk to organizations who are in these sectors, and our investors know that we bring quality organizations to market. Lots of additional resources. This is a short version of a detailed report. You see links here. If you can reach out to us, reach out to our website. If you want to learn more about the sector, whether you're a SaaS organization in the space or you're an investor, please feel free to do so. Thank you very much and have an awesome day.